Hey there, Lincoln here from bullacademy.org. Today I want to talk to you about what happened this week on the stock market, and of course we'll go through some news on IPOE, on CCIV, on PACX with Acorns, and DCRN with Tritium, the EV spec, and we'll also do a giveaway for the month of April. So stay tuned, and if you want me to cover other things, you can leave a comment in the live chat and we'll discuss those going through the video. We have a long schedule ahead of us, so let's just get to it. And before we do, actually, don't forget to like the video, subscribe, comment, and of course, join us over at patreon.bullacademy.org to support the channel, get more access to me, and get direct answers to your investor questions. And you'll be able to engage on our Discord channel where we discuss the stock market every day in real time to share news, rumors, and other investment ideas. So I hope to see you over there. Now let's hop in. So today we have CCIV Lucid Motors. This week, CCIV Lucid Motors, the SPAC that's taken Lucid Motors public, they announced their UX for their car. So of course the car is an EV, and going forward, all of these cars are going to be mini entertainment centers. So, and of course, there is a lot of controls in the car. So Lucid Motors is saying, hey, we're a hardware company, but we also do software, and this is how our software is going to look. So if we go to the presentation or the Lucid Motors YouTube channel, we can actually see their UX. And let's actually just watch that real quick. Let me put my headphones in. We can watch what they say here, because it's actually nice UX, and I want you to see it for yourself. We can skip through, but we should at least take a little look. Give me 1 second. Let me get this set up real quick. I forgot to turn on my sound. So we have that, and you should be able to hear this now. A little bit of technical difficulties here. Give me a second. And this should be working now.
But it's important to remember that great interactions I think the word magic is often used when describing a new product or experience, and it's easy to see why. Technology enables wondrous things, but it's important to remember that great interactions, design, or even incredible driving experience isn't magic. It's intentional, thoughtfully crafted for use by people. Lucid's approach to human-machine interface isn't just about new features, although it certainly has some world-class ones. Nor is it just about technology, even though countless lines of code have been written. We've learned an interface isn't just about utility, it's also about humanity. We're happy to reveal the Lucid User Experience, or Lucid UX. In talking to people about Lucid, they tell us the same thing over and over. The interactions within the cars they've driven in the past aren't as easy to use, intuitive, or just plain beautiful as the other devices in their lives. Our drivers expect technology to aid, not distract. That's why we've designed a system that keeps everything that works about the traditional car interface, like a beautiful steering wheel, sculpted physical controls, and tactile touch. We've paired it with everything that needed to be fixed. Let's start with the displays. We've created a 34-inch floating glass instrument cluster display. It's paired with a lower console display. We call it the glass cockpit and pilot panel.
What really sets us apart is the form factor itself. Everything is contoured to the driver to optimize ergonomic reach. So I have a really good touch range for every screen inside the car. At the end of the day, we shouldn't be making a tablet on wheels.
It's important that a driver has access to everything a system can do without.
As a driver, I like this setup. Just a quick word on that, because you can easily access whatever you need. And for the usual dash where you can see your speed and your mile and all that other stuff is right in the middle, so you don't really have to access that. But then to the left, you also have more of your controls that you usually have in that left side of your driver's side. And then of course on the right side, you have the music, the navigation. And I've never used like in-car navigation before because I always use my phone. So I'm interested to see how people will actually react to this, because in-car navigation used to be a big thing before the cell phone, the mobile phone, what's it called, the smartphone. But I want to see if people actually make use of this in-car navigation. And there's going to be some nice features in this in-car navigation that might make people actually want to use it. So we'll see that when he goes to talk about it. But I'm liking this so far, like this setup. And of course, then they have the little tablet in the bottom, in the center of the car, where you can get more controls, more details. And he'll talk about that more. So stay tuned. Let's watch that.
Without being distracted. We've created a logical grouping and standards in our controls. Starting with the left, we have functions that are visible at all times. Everything a driver needs to stay focused on the road. In the center, we have a minimal yet warm digital cluster that takes advantage of the flexibility of a digital display, but doesn't clutter with too much. Moving right, we have media, navigation, communications, and a home screen. We strive to make all the systems and displays totally seamless. They all look the same and they all work the same. Moving down to the pilot panel, which provides a larger canvas when you need more information. It also provides a console for vehicle functions and climate control. Users' behaviors are biased towards a specific mode of interaction that fits with a certain task. This means if it's easier to accomplish something with your voice,
Alexa, show me the weather.
Currently, in San Jose, it's 64 degrees Fahrenheit with mostly sunny skies.
Lucid UX provides a voice control with Alexa.
But if it's easier to touch, then the system can do that too.
Our approach to touch includes crafted experiences that just make sense for driving. And physical controls shouldn't go away just because it's trendy.
We've crafted ours with tactile quality, essential for reducing driver distraction.
Often, interactions are almost invisible. Facial recognition aids heads-up and convenience systems, exchanging data with a Lucid ID account. The pilot panel retracts to reveal extra storage that keeps that minimalist look. All of this sophisticated usability is partnered with a look we've strived to make warm and inviting. Our interior themes are inspired by the locations and the light of California, and we've carried this aesthetic to the graphic user interface and even to the menu
That's very
buttons.
nice.
One of the key design patterns is application flow, which allows multiple displays to expand and contract so the driver isn't overwhelmed with distracting options, menus, or settings. If a more sophisticated interaction is needed, a driver or passenger can pull the smart drawer to reveal more in-depth controls. And it's not just about pixels. With both interior designers and digital designers creating elements together under one roof, we can unify each and every touch point. This means contact of a physical control creates a natural response digitally. And we've got interfaces that stand alone when it comes to innovation, like using the LEDs in our light blade to display state of charge. So let's talk about all the senses. Powered by Dolby Atmos, the 21-speaker Surreal sound system can direct audio left, right, back, front, up, and down, and even move around you. This fidelity isn't just an amazing sonic environment for entertainment, but it helps keep you safe by enabling directional auditory cues for things like alerts, notifications, and warnings. These design details really add up for an incredibly smooth experience. Our leaders at Lucid have decades of experience designing cars, and the Lucid Air is the canvas they've always dreamed of, free from legacy and limitation. How do all of these things impact your life when you take a Lucid home? Electric vehicles are superior technology, and the time for adoption is long overdue. We've anticipated many of the obstacles of day-to-day use, so every interaction feels effortless. First, you can check the climate of the vehicle remotely and check its status. Planning routes for future trips in the Lucid mobile app is easy. With a beautiful key fob or using your phone as a key, you will instantly connect to your Lucid on approach. Facial recognition means the second you sit down, your selected saved preferences start adjusting. But of course, you're free to tweak with your mood. And the routes you set up?
That's very nice, because if there's multiple drivers of the car, like say your spouse, they recognize who you are and they get your settings prepared for you for your driving experience. That is pretty awesome. So I would love to try this out. Of course, I don't have that much money to buy one of these, so hopefully one day I can go to their centers here in New York City and try out this UX. But let's keep watching.
They're all ready to go in the in-car navigation. And if you need to stop on a trip, altering the navigation is straightforward and easy to understand. A powerful rangefinder automatically serves up charge locations and calculates range previews. Range and power levels aren't hidden or displayed in a way that would induce anxiety. Even our fonts were chosen for ease of mind. Our system was created to play well with others. We have incredible partners whose functions are seamlessly integrated. iPhone users will enjoy wireless Apple CarPlay compatibility. Android Auto integration is also offered, along with other popular apps and many more to come. The DreamDrive system includes incredible functionality on day one. We're going to have more exciting DreamDrive announcements soon. Charging is straightforward with the Electrify America network. And while charging, passengers can get an in-car seat massage or enjoy Lucid's surreal sound system. We're just getting started with Lucid UX. Software brings the machine to life, and owners can expect regular updates bringing new features over the air. As our DreamDrive features continue to mature and take advantage of the full suite of 32 onboard sensors, owners can expect a product that evolves and improves through its lifespan. And we're not even close to done. While we've developed the first version of Lucid UX, we're excited to roadmap new features, technologies, and interactions. Our designers and software team can't wait to see how people use our vehicles and get ongoing feedback and data to iterate on. Lucid has groundbreaking technology, but the advanced tech won't matter if we're not centered around the human experience. It seems to us self-evident that any machine you trust with your most precious cargo shouldn't be about distracting gizmos or confusing language. Lucid UX isn't made for the vehicles. It's made for the people that are using them.
That's pretty good to me. I like the UX overall. Of course, I like Google, what's it called, Voice better than Amazon Alexa. So I hope they do include your choice of a voice control. I like that they give you everything you expect in the car in the same spots, but then they give you more to make your experience better, like the navigation and they include ways to add stops, and hopefully I expect them to add charging locations. That'd be very intuitive option to include there. So let's look at some comments real quick. They say, I love how they use a surround sound system to give you alerts contextually. Some guy says just launched a production car already. So people they like it, but some people are just saying, hey, we love the PR, but just get the car launched, just get into production and let's see it for ourselves and I guess get customers' hands on it. So they have done they have let car journalists go out and actually get a test drive of this car, and there's been good reception of the UX and the production car, or the prototype car, of course, that is pre-production. So that's the news on UX, on Lucid Motors UX. Investors should be happy about that. That's not really much more to say on it because we still don't have a production car. They still have their goal of producing cars and having it in customers' hands by the end of this year. So nothing has changed on that realm, but this is good. This is a good update to know that they're still moving forward, right? They're doing their best to show, hey, we're not Nikola, right? Our systems work. Our car drives. We're not going to throw our car down a hill and say that it's moving on its own. And our UX is not just a staged UX, right? People actually use it. They touch it. The stuff works, right? Our software actually works. We're not Nikola. That's what everyone's trying to do these days with the EV cars. They're trying to make sure that everyone understands, the investors and customers out there understand that, hey, we actually work. We're actually a car. We actually have functioning prototypes, and we're not staging our UX or our systems. So that's the news on CCIV Lucid Motors. I have 2,000 some shares of Lucid Motors or CCIV, the spec that's taking Lucid Motors public, hopefully in the second half of this year. I believe in Q3, maybe Q2, but not really too much news here besides that. And let's continue. If you have any thoughts, leave your thoughts in the comments in the live chat, and I'll get to those. Lewis says, I've been into CCIV since $13 per share, hoping it blows back up. Yes, we went from $12, $10 to $65 in a matter of 6 weeks, and then we're back down now to $19, $20 per share. So we've been on a roller coaster, but I believe in the long-term potential of this company, so long as they continue to achieve their marks, right? And produce 500 cars, sell those cars this year. They said that they have a full order book. They've started closing down reservations because they can't meet any more of those demands right now. So things tend to be going well, but we'll see how things go once they actually start producing. So thanks for your live chat comment, Lewis. If you have any thoughts, leave them in the chat below. Now we have Acorns. Let me just take a quick break and we can get back to Acorns. Give me 1 second. I said all of that with no sound. That's awful. I'm so sorry, guys. I should have looked at the live chat sooner. So you all said no volume. I don't know why I didn't see that. So let me go through all of that again. At least this I can say it better. If you're still here, thank you. I had to pause the mic earlier because I couldn't stop sneezing and coughing. So forgive me. Second time I've done this. Let me go through that again. Thank you all for staying here. The 9 of you who are still here. What I was saying was that I like that they have high stickiness. They have very fast growth. They're growing at 63% year over year, compounded annual growth rates for between 2019 and 2023. That's great. They have high stickiness. Their customers stay with them at 95% month over month, 85% for the year. That is very high stickiness. That's great for them. Acorns they're doing very well. So I like that about them. All the numbers look good to me. They have high gross margins, right? Their margins were 71% gross margins, 71% 2019. 2020 was 78%. 2021, 84 is what they're expecting. 86 for the next years after that. So that's good, right? So I like that. But what I was saying was that when I invest, and we always talk about this, we invest for the future, right? We want to see what our companies can do in the future. So we invest today knowing that they're going to do better in the future and continue to grow. So when I'm investing, I want to see that my companies can grow to become very large in the future. And from what I'm seeing from this model, they're only charging their customers, they're targeting people who are lower middle class. So they're making less than 6 figures in their salary. So they're only charging these people $1, $3, $5 per month. And then they have add-ons that get them to $10 per month in some cases. So that's good, right? The people, of course, they're going to be sticky because it's not very expensive and they're giving them a good value, right? People they help these customers invest in the stock market passively, so they don't have to make their own choices and have all the risk of passive investing like we all do if you're watching this channel. So they have a good mission, they have a good customer base. But the issue is when we look at their revenues, their projections, they're looking to make $300 million in revenues in 2023. So it's not that much. So if I give them, say, for their growth rate, they're growing very fast. So if I give them a 20x multiple on this revenue in 2023, $300 million, if they can hit that, and I say, hey, I'm gonna give you this generous 20x or even 30x, right? If I give them that, they're gonna be valued at, for my valuation, at $6 billion in total to $9 billion. They're valued in this SPAC deal at $2 billion. So that's 3x to what? 4x, 4.5x in the next 4 years. It's not enough for me. And just the revenue itself is just not enough. So that's what I was saying. I'm sorry that I messed up the volume on that for like 3 minutes. So for Acorns, again, I like their numbers. I like their growth rate. I like their margins. Their business seems good, and they'll do well. They have very high margins. They'll be profitable, right? They will be profitable in the future. So I can't take that away from them. And they're comparing themselves to Square, SoFi, and all these companies are they have a lot more revenues than they do. At least Square and SoFi do, for sure. So I don't like the comparisons here. Well, it's fine. It's just they are not charging as much or making as much revenues as these other companies. So that's my take on Acorns. That's why I'm not too excited for it. And let's just look at the SPAC and how investors reacted to it when they announced this deal. So PACX. So we can see that when the deal was announced, it jumped from $9.75 to $10 per share. So SPACs overall are not popping as they used to, right? So I can't say that this is very representative of them just not being exciting, but that's just what happened, right? People were not overly excited, and I just wasn't either. I've heard of Acorns. I've never used it, but I have friends who have. So they have a real and growing customer base. I just don't think that they're going to make enough money for to excite me as an investor for the future. So I'm not touching it. I'm waiting for Robinhood. Robinhood makes more than that from just trading, right? From their customers trading on the app. So that's what I'm looking for. But let's move on. So before we do, let me just look at the live chat real quick and we get to Tritium. So we have, yeah, Mike says, I love SoFi. And he says, last 4 minutes or so, my friend. Yeah, I lost 4 minutes of no volume. That was awful. I apologize again for that. That was unforgivable. And Roger says, in their risk of operations, they also said this is for Acorns. They rely significantly on revenues from subscribers and may not be successful in maintaining the PO or expanding their offerings. So yes, Acorns, they are very heavily reliant on subscribers, right? And that can be good. If you're a subscriber company, if you're doing SaaS, that's actually great, right? You get high valuations for that. But if you're only charging $1 per month, $3 per month, $5 per month, and you're targeting the lower middle class, people who don't make that much money to begin with, then yeah, your model is not good enough, in my opinion, right? And they are also saying that, hey, we're not too confident in this. So yeah. So anyway, before we move on, don't forget to like the video, subscribe to the channel, hit the notification bell, and of course, thank you again for staying here with me through that big misstep. But let's get to Tritium now. Tritium is a EV charging solution, a original equipment manufacturer who produces these EV chargers, DC fast charging. That's what they're focused on, DC fast charging. So not the slower AC charging that companies like ChargePoint are more focused on. They're really focusing heavily, and that's all they do, DC fast charging. And they're based in Australia, but they're global, and they've sold over 4,400 of their equipment to partners around the world and customers. So that's what they do. They are about 80% focused on just selling their hardware, their chargers. Then they have 10% in software revenues. That's their goal for 2025. They want to get to 10% in revenue, the revenues coming from software. So we can see that right here. That's what this graph is. So let me just blow that up real quick. So we can see that today, 4% of the revenues come from software. Not great, in my opinion. I'm looking for companies that are going to be heavily bringing in recurring revenues from their software, like ChargePoint. ChargePoint has a goal of reaching 49% of the revenues coming from their software offerings, right? Their software and services, so recurring revenues. But these guys, their chargers are most of their revenues, 73% of the revenues. So not great at all. And yeah, they hope to get, by 2026, they hope to get to 17% of the revenues coming from services, 10% coming from software. Yeah, it's too much hardware revenue for me. Of course, I'm sure they're growing fast. They are growing from $59 million in 2020 to 84 in 2021 and they hope to double, more than double in 2022 to $170 million. And then by 2026, they hope to get to $1.5 billion. I believe ChargePoint is looking to get to $2 billion in revenues by that year. Same year, and they're going to be 49% recurring revenues. So for me, I'm still sticking with ChargePoint. That's my EV charging bet. Like I always say, they're the ultimate pickaxe for the EV revolution. So everyone wants to look for who's going to beat ChargePoint, and I am sticking with ChargePoint, especially against Tritium. If you want companies that are making most of their money from one-time charge hardware sales, Tritium is your bet, right? If that's what you're looking for, I'm not saying it's good or bad, but that's what they do, and they're the leaders in this space, in the DC fast charging OEM space. So that's what they do. That's what they're good at. If that's what you're looking for, this is your company. But for me, as a growth investor who's looking for recurring revenues as your main revenue source, and software SaaS, they're not gonna meet the bar here with a goal of 10% in revenues coming from software. So that's that. And their valuation for this deal is $1.2 billion, and they're making $84 million in 2021. And if you look at the SPAC is going to take them public, DCRN. That also had a similar reaction from investors when they announced. So they were at 9.68, and they went to 9.8. So not a great reaction. Again, SPACs are not popping as much. So those who do believe in this company and want to hold for the long term, they could take the time to look into this company and get to buy at a cheaper rate than they would have had to in the past when SPACs were very hyped up, and anything that would be announced would pop by 20%, 30%. So if you're long on this company, then you can take this as a good reaction for you, because you're going to buy it at a cheaper price than you would have to if there was still hype in the SPAC market. But again, not for me. So let's keep moving. And before we do, let me just get to some live chats real quick. And Mike says, thanks for your input. I appreciate your insight and recommendations. And thank you, Mike, for being here. And for everyone else, if you enjoyed the video, don't forget to like the video below, subscribe to the channel, hit the notification bell. And before we get to our last topic, of course, if you want to stay tuned for that, we're talking about IPOE, so stay tuned. But before we get to that, let's actually do our monthly giveaway. So for April, it's a little late. April was almost a whole month ago, but let's do April's giveaway for our patrons over at patreon.boacademy.org. So in April, we had 15 people sign up for the giveaway. And so these are the names, and let's add them all to the list. And if you want to engage, you want to take part in these giveaways, join us over at patreon.boacademy.org. And of course, you don't have to make any purchases to take part, but this is what we do in our Patreon community. And just to say thank you to our patrons. So we're giving away $200 every month, and we'll give away $100 to each of the 2 winners here. So let's roll our first winner. Of course, if you won last month, you can't win this month, just to keep it fair. So let's hit spin and see who wins the first prize. David Ferrero. Thank you for being a patron of the channel. And I am happy that you have been here for a while now, and of course engaging in the community and helping us continue to grow. So I'm glad that you won your $100 for this month of April. So let's move on to the next one. Let's hide this choice. So David, and the next one will be, drum roll please. There we go. We have Shane O'Rock. I believe, Shane, this is your first time winning, and you've been a patron for quite some time now. So thank you for staying in there and supporting the channel for all these months. I appreciate you and everyone else, all of our patrons. And if you haven't won yet, stay in there. You're going to have your day in the sun. So thank you again, everyone. And let's finish this up. So next up is IPOE SoFi. So as you may know, if you watched my previous video from this week, we had SoFi and IPOE confirmed a merger. The merger was approved on Thursday of this week. And that means that IPOE the SPAC is going to be delisted on Tuesday, June 1st. And SoFi will be traded as SOFI on the stock market starting June 1st. So those investors in the SPAC, IPOE, all these months since January 7th are going to now become shareholders of SoFi, SOFI. And if you have warrants, SoFi W, or sorry, IPOE W, they will now become SoFi W, SOFI W. So your warrants will transfer over and become warrants in SoFi, and you will have the same terms as before. And if you don't know them, you can find those in the SEC. I haven't read them because I'm not investing in the SPAC, in the warrants, but I'm investing in the common shares. So I keep things simple for me. I don't like to do too much warrants because they do have higher rewards. It's just they have higher risk, and they require that you take more time and effort to stay up to date on them. And there's a bunch of strings attached to those. So I don't pay too much attention to the warrants unless it's a very good deal. But if you are investing in those warrants, we've covered warrants in the past. We have the top video, according to Google, teaching warrants and breaking down why there's such great opportunities for long-term investors and for SPAC investors, of course. And of course, we've also covered the dangers of SPAC warrants. So let's actually look at those videos because it's important that you understand warrants. So we have these 3 videos. We've covered FMCI, which was a SPAC that took Tattoo Chef public last year. We've covered their SPACs and broken down all the terms of that. So you have that as a case study if you are investing in the SPAC warrants. Then we have the dangers of SPACs, and then we have our top video here on SPAC warrants, and that will teach you all you have to know about warrants. So that's the news on IPOE and their merger with SoFi. So congratulations to all the long-term investors in IPOE SoFi. And now we get to celebrate as shareholders of SoFi. And of course, I have 4,000 shares of the company. So let's actually look at that real quick. IPOE, I have exactly 4,001 shares of IPOE SoFi. And I'm up 13% for the first time in quite some time. I've been down for a while. My average cost was $18 per share. So I got in a little bit on the later side on this one because I didn't react fast enough. Because I don't know why, but I just didn't react fast enough. So I've been averaging down between the last few months when it was down to $13, $14 per share. I was buying it up, and I got about half my shares when it was down in March and April. So thanks to all the people who were selling off your shares, that got me a great deal on this long term. My top investment is about 30% of my portfolio. So I'm holding this for the long term. And yeah, I think that we're going to, as long-term investors, we're going to benefit a lot from this. So there's more news on IPOE SoFi. SoFi now does 2 days early direct deposit. They will, if you do direct deposit with their SoFi money, what they will do is they will pay you your paycheck from your job up to 2 days early. So this week I got my paycheck a day early, right? I got my paycheck on Thursday instead of Friday. So this is great. Only a few, only a handful of banks out there have this as a feature of direct deposit. So again, this is another way of that SoFi serves their members. They do whatever they can to continue to serve their members across the board so that they can keep them for the longer term, increase the lifetime value of their customers, which means that they get to also decrease the customer acquisition costs, which means that they get to sell more of their products for cheaper and pretty much free revenue. Like about 65% of their mortgage products were sold to existing members, which means that revenue from those products were free. So this is how SoFi continues to win, continues to innovate in this market. So this is why I'm so bullish on the company, because they do whatever they can to satisfy their customers, their members, and then keep them in the ecosystem, and then upsell them on their higher margin products. So of course, this doesn't make them any money. This feature doesn't make them any money, but directly, but over the long term, indirectly, they get to keep their customers for longer term and then upsell them. So that's the value of serving your customers and being vertically integrated and providing centralized services. I've talked about it so much in this channel. So if you haven't seen that, go watch my previous videos on IPOE and SoFi. And now they have a new homepage. So let's go to SoFi.com. They just rolled this out this week, I believe. And it's a lot better. It's very clean. They show you all their services. They have invest, personal loans, student loans, money, home loans, credit cards. And their credit card is actually special in that if you pay off your credit card debt on time every month for 12 months, they'll actually decrease your APR, your interest rates, by, I believe, 1%. So that's another way they're showing that, hey, we're going to do whatever they can to keep their customers, keep their members in the ecosystem. They have private student loans. They have insurance now, right? They have, and this is a car loan refinancing. They have credit cards and all of that. So this is why I'm so bullish on this company. They serve their customers across the board. So that's the news in IPOE SoFi. If you have any thoughts on that, I would love to hear your thoughts on that. PM. I can't say your name correctly because it's a little not family friendly. But PM says we need more volume, so I will work on the volume. I apologize for all of the volume issues today, but next time we'll have much better volume and I won't make the same mistake again. So thank you all for being here. That's all I have for you today. I know there is some troubles, but I appreciate you staying in there. So thank you again for being here. If you enjoyed the video, don't forget to like, subscribe, and comment your thoughts below. And as always, thank you. I'm Lincoln with BoAcademy.org, and have a great day.